In this video, I'm going to go through every single Melbourne suburb that I think is worth considering, and I'm going to try to rank them as best as I can. And as you can see on your screen right now, you can see a list of about 20 odd suburbs that is worth consideration. And these suburbs are already ranked into a rough order of what I would be looking at. And if you want to just see this and click off the video, then that's up to you. And so if you don't watch through the entire video, you can already see all the suburbs roughly ranked in the order that I would look at them. But I am going to go through every single suburb, look at the data behind them, and look at the maps as well, just to give you an analysis of each of these locations and what things you should consider and what things you should watch out for. It's going to be a bit of a long video, but make sure you watch right through till the end because there is so much value jammed packed into this video. And if you have not already, make sure you join the private community. There's over 280 members talking about different locations every single day. It is an absolute no-brainer with the amount of resources you get, the amount of help that you get. It's almost $1 a day. And just by not being in the community, you're losing hundreds of thousands of dollars and you're missing out on hundreds of possible opportunities. So make sure you join because there is free resources, there is exclusive property content and courses. This video was on the community about 2-3 weeks ago, so you've already missed out by a month. There's weekly community courses, advanced property resources, and so much more. So if you're feeling lost, if you're feeling confused, if you're unsure where to buy next, then that's where we can help you. That's where we can assist you on your investment journey. So make sure you jump into the private community. It's an absolute steal. And let's jump into the first location, and we are looking at Carrum Downs. Now, Carrum Downs is probably one of my most favorite locations to consider as investment into Melbourne at this point in time. It has all the right metrics for short and long-term growth. It's a suburb on the southeast of Melbourne. It's about an hour and 30 minutes away from Melbourne CBD in peak hour traffic, or about an hour by driving and about an hour and a half through public transport. And when we start to look at the data, it's about $750,000 in median price, and you can get about a 4% yield. People have got a 4% yield in Carrum Downs from our community, which is great to see. Prices are starting to rise with a good positive quarter change. Rents have risen about 5% in the past year, which is what we like to see. And it has good socioeconomics. So it has a good rent to owner occupier ratio, ERSAT score, and even a hold period. And for a capital city, being under 45 years, Carrum Downs is close to 35, which makes it a very affordable location. Hence why there's been so much hype about this area. Stocks going down, days on market is looking very strong. So if you are looking for a hot market to invest into for quick capital growth, Carrum Downs is a location you can consider. Be aware there's lots of competition, low stock, so you have to be on the ball. Next, we're going to talk about Frankston. Now, Frankston is a location with a bit of a stigma over the past decade or so, but it is an area that I would consider for location short and long term. It's alongside Carrum Downs, as you can see on the map here. It has great opportunities over the next decade or so because it is a location that is right next to the beach and it's under $1 million. It's $750,000 in median price with a yield of close to 4% as well. We can see prices are rising and we can see the median rents is also about 5%. As you can see, it still has a good ERSAT score of 4, but a higher rent to owner occupier ratio at 39%, meaning less people want to live there for the long term, but it still has a good hold period. And I think this will change over the next decade or so, but it is also a very hot market. I think it's a good long-term hold and stocks getting lower by every single month. I know the demand metrics don't look so nice, but from what I hear on the ground, it is certainly picking up. And Frankston is just out here. And the thing with Frankston, I would say, is that the people who could not afford the location to Seaford look further out into Frankston North, which I'll touch on later, and Frankston as well. And being, 10 minutes, 15 minutes away from the beach, under $1 million, that's going to do very well long term. The next location I want to talk about is Meadow Heights. Now, Meadow Heights has a median price of around $650,000. It is a market that is certainly become hot, and it's been a location that I've been talking, since about 6 months ago. North Melbourne, very affordable, high yield, great opportunities, long and short term. It's about 47 minutes away from the CBD when you drive, and about an hour via public transport. It is a landlocked suburb, which means there's not much new developable land within the suburb itself. I know there's some out on the west, but in the suburb itself, not much. Now, North Melbourne is known to be a rougher area, right? It is where sort of the gangs are up in North Melbourne, like around Coolaroo, Campbellfield, Dallas. These are all very rougher areas or rougher parts of Melbourne, so you do need to watch out for that and take a more active management approach when it comes to the rentals around here. Make sure you put the right tenant in. But if you're after a capital city, good yields, affordability, Meadow Heights is a region, a suburb that must be on your watch list that you are looking out for. And I cannot stress that enough. It's a good location to consider it as an investment opportunity. Of course, do your own due diligence, but one that should be on your watch list. And when we look at the data behind it, you can definitely get above a 4% yield. Prices are rising, already 5% growth in the past year, which means we're probably on track for about 10% growth this year. Rents have been rising well over 6% or well close to 6%, sorry. But as you can see, the lower socioeconomic area, but still a decent RO ratio and a good hold period. And the metrics just look absolutely sublime for this market. It's hot. Be ready for some competition. Next, we have St. Albans. St. Albans is a location that has started popping up on the data as an investment opportunity, about 40 minutes away from the CBD via car, and then about another 40 minutes via public transport as well. So very close to the CBD, a good location that is landlocked by other suburbs like Kings Park, Delahaye, Taylor's Hill, etc. So over the long term, I'm very confident about this area for you to consider. And when we look at the numbers, under $700,000 median price, which is very good. The yields are lower, closer to the 3.5%. Competition is getting pretty high there as well, but we're seeing positive price growth, positive movement on the rents. 6% of the past year is just absolutely astonishing. That's what we want to see. LSAT score of 1 with a 36 RO ratio. So decent socioeconomics, not the best, not the worst. And the whole period is above 11 years. So people want to live here for the long term. And I know the stock on market looks a bit interesting, but that's because that's just capturing new stock. But from what I hear on the ground, it is becoming very hot as we speak. Demand levels are looking very good as well. And vacancies are 1.39%. When we've got a lot of suburbs within Melbourne sitting around 2.5%, when vacancies are 1.39, it is a reflection of why rents have been rising so high. It is a good location from a commutability perspective, from a livability perspective. It's a location that I think you should definitely consider if you are planning to check out Melbourne. On a similar token, we have Deer Park, very close to St. Albans, another location that has very similar market metrics, median price, yield, etc. There's good steady family demand, solid infrastructure, and there's a growing commercial precinct around Deer Park as well. It's a location that you should consider. The data is looking stronger, the on-the-ground activity is looking good. We're seeing more positive price movement, better socioeconomics than St. Albans, but I think in generally speaking, it is very similar. Affordability is okay, it's under 45 years, and the metrics are looking good. But this has a slightly higher vacancy, but I wouldn't be too stressed about that if you just be active with your property management and you make sure you give enough time to find a tenant in the area. Again, understand that it is a lower yielding area, so cash flow is a problem, but check your numbers, and we have a property cash flow sheet in the community. Now, following on from there, I want to look at Sunshine West. Now, Sunshine West, I think over the long term is going to do very well. And if you don't understand the gist so far, any landlocked suburb is going to do very well in the long term. You are in a capital city. The only way you build out more is either building units or you build out further onto the west. And locations like Sunshine West is already built out, it's established. And as long as you buy in the low residential pockets away from mass townhouses or mass units, then you'll be absolutely fine and sublime for the rest of the year. You can see, again, it's about 40 minutes away from the CBD via public transport. So super easy transport commute, and also 40 minutes from the CBD via driving as well. Another area which I'm fairly bullish on over the next 6 to 12 months and further on from there, the numbers are starting to look good. The renter to owner occupier ratio is good, good socioeconomics, good hold period. And I think over the next 3 to 6 months, these figures are going to look a lot nicer, a lot better. It's in the growth corridor of Melbourne's west, close to Sunshine CBD. There is also upgraded train links as well throughout this location. I think the suburban rail loop also loops in around here. So I think overall, a very good location for you to consider, and ranks pretty highly so far. And I am going in these by order, by the way. Next location you can consider. This one is further out on the west, but the numbers and data behind it are looking very good. Under $700,000 buy price, $500 or $450 rent, yield around 3.4%. And when we start to look at the numbers, it's looking very good. We've already had 5% growth over the past year, positive quarter change, positive month change, good economics. I mean, renter to owner occupier ratio is sitting at 23%, which means there's a lot of owner occupiers. It is a family friendly location. And this is also reflected on the fact that the whole period is 12 years. People hold this property for a long time in this area. Affordability on 40 years is very good. The numbers, stock on market, very low. Days on market, very low. That means there is a good supply and demand dynamics in this area. We're going to see price growth in this location as long as you can contain the lower yields. It's a quiet, family oriented suburb with good school access as well. So, this is a location that should be on your watch list to check out. Public transport is all right. It's around 1 hour via public transport and 40 minutes or 47 minutes via driving as well in peak time. So not too bad at all. All right, I'm going to keep smashing through this as well. Let's have a look at Alban Vale in Victoria. Now, this is another location that has been on my watch list for a bit. Alban Vale, $640,000 median buy price, around a 3.4% yield. Very similar to St. Albans, Delaney, Deer Park, etc. All very similar. And what you're starting to see is that there's a cluster of strength along the west side or the northwest side of Deer Park, Kings Park, St. Albans, Alban Vale, Sydenham. That's a good thing. Because once one suburb starts going up in value, the other suburb, as a ripple effect, as a consequence, will also start going up in value. So if you can't squeeze into one suburb, you want to look at the nearby suburbs and still see if you can find a good deal. And prices are going up and stock is getting lower and lower by the month. Good socioeconomic area, affordability a bit lower, around 45 years, which isn't as good, but still worth considering. Demand is getting high, stock is very low. This is one of the locations that I would be keeping a very close eye on and very closely considering. I'd start calling up agents to see what stock's available, what houses can I buy, because there is good opportunity here. But again, the lower yields factor that in. That's going to be a reoccurring theme amongst my location. Next one is Sydenham. I think the Sydenham is a great location to consider. I understand there's a lot of vacant land around it. However, the suburb itself is already well built out. It's established. There's a good transport link. It's about an hour from the CBD. And to be honest, an hour from the CBD is not terrible at all. It's about 50 minutes by driving as well. And I think for an established location, there is good opportunity in Sydenham for you to consider. And I think it's often overlooked by investors simply because there is a lot of vacant land around it. But when you start to look at the data behind it, good yields for Melbourne, a decent buy price, prices starting to go up. But the key thing is building approvals is basically none. So you can't build any more houses in Sydenham. You may build them around it, but it's still going to take time. And over the short term, good transport, good opportunity, affordable price. It has a great opportunity for you to get into the market, and it's good socioeconomics. 5 ersatz score, good RO ratio at 31%. These are the suburbs that's going to be $1 million in 5 to 7 years time, very possibly. So go check it out. A very good location for you to consider. Now, the next location I want to talk about is Jacana. Now, Jacana is a location that I also think is pretty overlooked. There's been a lot of talk about Broadmeadows, West Meadows, Dallas, Meadow Heights, etc., etc., etc. However, Jacana is one of those locations that's in a small pocket that I still think is worth considering. I know it's very close to Broadmeadows, which is a very sort of lower socioeconomic area that you don't really want to be considering as part of Melbourne, even though it has opportunities. But Jacana just is a little bit nicer, a little bit stronger in terms of data metrics as well. Typical price, it's going up. Rents have not been going up as much. It's around 1%, which is not great, but it's a little bit nicer in comparison to Broadmeadows. Now, normally I really wouldn't put this location in because the vacancy is around 3%, but I think that is a bit of a misstep by HH data at times. So I would really contact agents, and I think it is still worth looking into. Affordability, proximity to the city is going to do well for this area over the long term. And if Broadmeadows continues to gentrify, that makes Jacana to look nicer and better as well. So it's one worth considering. It is on the list. It is a landlocked suburb, so one that I would be considering as well for the long term. All right, let's continue on to the west side, and here we have Hoppers Crossing. Now, Hoppers Crossing is probably my only pick. I know I'm going to go through one more suburb, but my only pick of Melbourne, I would say, on the west side. It is one of the more established locations in West Melbourne, and you can't really build any more houses in the suburb of Hoppers Crossing. Obviously, you can build around it, south it. There's so much available land to build around it, but Hoppers Crossing is that established location in West Melbourne. It has a good commercial precinct as well, good transport hubs, about an hour away from Melbourne CBD, sometimes quicker, and the data is looking nice. The yields aren't so great at around 3%. We're starting to see a positive uptick in movement. You can wait if you want to take a little bit more time, but good socioeconomics, 26 RO ratio, good ersatz score, and good affordability around 40 years. The market metrics, stock on market, days on market, it's looking strong. But one thing you will notice is the vacancy is pretty high, and it's going to be high for the foreseeable future, especially as more investors come into the area. I would say there is available stock there to rent out, and that is also supplemented by the fact that there's a lot of development in Werribee, a lot of vacancies in Werribee as well. It's a bit of a concern, but there is good opportunity there in Hoppers Crossing for you to consider. On the back of that, we have Werribee, an affordable location for you to consider, around 40 minutes from the CBD, a bit longer at times as well, an hour by driving, and it has good metrics. So 650, 3.65 yield. And I've made an in-depth video about West Melbourne. Go check that out. So I'm not going to go too much into this one. And my biggest concern was around the vacancy rate there. But if you're looking for an affordable price close to the capital city that has good long-term potential, but you're going to have to watch out for the vacancies in that area. That's why it's ranking a little bit lower in the list of my Melbourne suburbs, I would say. Now, I'm going to go back to North Melbourne. Now, I know North Melbourne's a bit sporadic around there. There is different reasons for that. I think Meadow Heights is the best location along the side North Melbourne corridor. Roxburgh Park is a bit further up, but the median price is higher, around $736,000. If you have that sort of money, I'd rather you buy in St Albans, Deer Park, etc., etc. But if you still want to consider North Melbourne pocket, you're still getting around a 4% yield if you buy right. Higher competition, prices are going up, rents are rising around 7%. Not a great ersatz score around 2, but a good RO ratio at 22%. But you can see people don't hold the property as long as they would like to. It's around 10 years. Other locations, you're sitting around 12 years, especially in the St. Albans, Deer Park area. But the metrics are looking good. We're going to see prices increase over the next 6 to 12 months, I would expect. And vacancy rates is around 3%, close to Werribee, which isn't good. So vacancies is another problem in Roxburgh Park. Arguably, sometimes more family friendly than Meadow Heights and Coolaroo and Dallas, but this North Melbourne pocket is known for being rough. So make sure you have the right tenant in there and make sure you don't attract the wrong crowd. Now we're going to go into some more higher budget suburbs. It's a nice way to put it. We have Narra Warren. Narra Warren is a location that I think is going to do fairly well over the long term. It's a well-regarded southeast suburb. It's lower yield, but strong demand from families and good schools. You've got Berwick nearby, which is pretty expensive, but it's a good location from a socioeconomics perspective. Good families, professionals want to live here, and good opportunity for you to consider. Now, Narra Warren yields around 3%, right? If you don't have the cash to hold this property, then you're not going to be able to. It's very expensive to hold the property like this. It doesn't really make sense from an investment standpoint for a lot of people, but if you're a cashed up buyer, you can hold the property, and this is going to go up in value. Good socioeconomics. Whole period is good at around 12 years. The metrics are looking nicer. Vacancy is a little bit high at 2.4%. But do your due diligence. This is a location where the numbers are looking better month on month. Not a location I'd normally tell people about because the yields are so low. But a lot of Melbourne is picking up now. And if you want quick capital growth, it's a location that you can consider. Next is Frankston North. Now, I talked about Frankston a lot earlier. Frankston North is another location you can consider. Now, it does have a pretty bad stigma to it. It's got a good buy price, around $600,000 median price with a yield of about 4.2%, which is pretty good. And prices are starting to go up with the quarter change at 0.2%. I expect that to look nicer and nicer as more months data come across. The median rents have risen by 8%, which is a good leading indicator of future price growth. And as I said, there is a bad stigma, and you can see the socioeconomics is pretty low. 45% RO ratio, but affordability is around 40 years, and the market metrics are looking good. The reason I do like Frankston North as a certain extent is that as a byproduct of Seaford becoming unaffordable or more expensive, Frankston North is a well-established location alongside Frankston that is almost 10-15 minutes away from the beach. It has a good opportunity to do great long term, and I know it has a bad rap to it. It does have a bit of a stigma, but I think over the long term, it's going to do well. It's a location that you should be on your watch list. I'd still prefer Frankston over Frankston North, but again, do your own due diligence. Now, some people are going to argue with this next suburb whether it is in part of Melbourne or not, but I thought I'd cover it. Melton West and Cooragee. I'm going to just cover these both together while I'm at it. As you know, I'm not a big fan of Melton. I think because of Melton South's development, new houses, there's a lot of vacancy, a lot of properties available to rent, and that will have an impact on Melton West and Cooragee. However, if you wanted a location to consider relatively close to the CBD, around an hour away from the CBD, you can buy properties for around $500,000, $550,000 in Melton West and Cooragee in an established pocket. You might do well, right? It's affordable, it's a decent yield, it's worth considering. The metrics are looking nice. From what I hear on the ground, stock is depleted. depleting. There is a lot more investor activity there. Buyers are buying a lot of properties in these pockets and these areas. So it's worth considering if you're looking only at capital cities, but you have a very, very, very tight budget. I'm not very bullish about it long term. I know there's a lot of talk about population growth and a lot of people are moving to the area. That is yet to be seen. If you want to consider it, it's on the list. I mean, you can see the Kurajang's vacancies at 4%. It's just ridiculous. But again, do your own due diligence, check it out. It's on the list. I know this video is really long, guys, but I'm going to do this one video, and I think that might be the rest of Melbourne for me for the rest of the year. All right, Mill Park. Now, Mill Park is a well-established suburb. I think it suits investors who are targeting equity over cash flow. It is well established. It is desirable by families. It is a location that you can consider if you can hold the cash flow. Right, it is alongside the narrow one where I don't recommend it necessarily from an investment perspective because cash flow is one of the most important things. However, a long-term hold, a person that's maybe looking to own or occupy buy it. Mill Park is going up in value. Rents have risen 6%. Great socioeconomics, 5 OSAD, 23 RO ratio, great hold period, 13 years. People hold property here for a very long time. Vacancies are a bit concerning. Do your due diligence, talk to a property manager, but it is a location that could be and should be on your watch list. Following very close to Mill Park, you have Epping and Lalore around the $750,000 buy price, $800,000, around a 3.5% yield. Prices are going up. Median rents have risen by 5%, which is good to see. Good socioeconomics once again, and relatively affordable under 45 years. Not the most affordable by any means, but still okay for you to consider. The metrics are looking good in Epping. It is one that should be on your watch list. Right, it's about an hour and a half from the CBD and about 50-minute drive, so not too bad at all. These suburbs, these established pockets are going to do well over the long term, and that's the same thing with law as well. I think that's a byproduct of the law coming into the mix as well. Prices are going up here. Definitely a location that you want to be checking out, want to be doing your due diligence in. It is on the list. Go check it out. And I've just put a curveball of a suburb in there. Not my favorite location to consider by any means, but Cranbourne North seems to be the best out of the rest in terms of the metrics. Prices are going up in this location. The market metrics are looking good. Good socioeconomics. The whole period isn't as great, but vacancies are very high. I'm very iffy about this suburb. If you're going to invest in Cranbourne at any point, it's close to Narre Warren. A case can be made it's going to do very well long term, but there's a lot of developable land around Cranbourne West, around Cranbourne South, and in KCCD in general, there's a lot of building approvals. And by extension, you've got Pakenham as well, which is a further out east suburb. But if you're going to pick anything close to Narre Warren, you're going to pick Cranbourne North. And the metrics are looking good. Apart from the vacancy rate, the metrics are looking good. I know the demand doesn't look as nice, but talk to some local sales agent and I think they will tell you a different story. Overall, want to consider. And that's about 20 odd suburbs that you could consider throughout the entirety of Melbourne. I honestly think this might be the last Melbourne video I do in a very long time because I'm sick of talking about it. And I've given so much information, so many suburbs for you to consider. If you do have any questions at all, any questions about any of the suburbs I've talked about throughout this entire video, join the private community. I give this value and so much more every single day. We talk about different suburbs every single day. And if you're lost, if you're unsure about a certain suburb, a certain metric, a certain reason why your buyer's agent is pushing you towards one suburb, ask me, talk to me. We will help you. Our team will help you. The community members will help you. We are all here to assist you in your journey. I am in there every single day answering questions every single day. It is a no-brainer if you're new to property investment. If you need an affordable way to get access to education and mentorship, join the private community. It's an absolute steal at the moment. Over 280 people are reaping the benefits, and you don't want to be the one that misses out. Till next time, thank you.